to price in. It doesn't mean we can't buy it though. We are starting to get a discount to duration. So obviously a discount to duration means that that is now, well, you can see there's the discount to duration. First of all, there's the blue line is the 2s 10s. The 2s 10s is doing that, so the bond price should be doing this. Okay, so that was the first thing. Secondly, the 5s 10s was also doing the same thing. Not to the same extent, but the 5s 10s was also doing the same thing here. So if the 5s 10s is doing the same thing from this price here, we should also be doing the same thing here. Okay, so there's 2 discounts to duration, not 1, but 2 discounts to duration. On the basis that there's a discount to duration here, that's the strongest trade signal we're going to get, because discounts to duration, guys, bonds trade duration. It's as simple as that. That's what they are. They're duration instruments, different durations, 2s, 5s, 10s, 30s, whatever. So that should not be able to happen unless there's a mispricing of treasuries. And as a result, we want to try and take advantage of this low print. And sure enough, my goodness, we got lucky. If it hadn't had this acceleration on the 2s 10s, we would have probably have been sitting about half the distance on this trade so far. But we've came back into the change of behavior here, and we've had a brilliant halfback trade. And I don't want to hang about these trades, guys. I do not want to hang about these trades. So as soon as we got that premium to duration, it was time to get off your off your long trade and back into a short trade. Did anybody get back into the short trade? When you look at where the short trade came from, where was the lowest low in the 10s? Right there. So you can see that from that lowest low, the biggest volume came in here. You can see there was actually a turn in duration here, but the 2s 10s were still dropping. But anyway, so that would have been the only chance you would have had of being able to get the short trade. So it was a tough sell, but you want to be selling. You want to be selling into this as much as you possibly can be when you see a premium to duration, not before, obviously. When you see a premium to duration, you want to get back into that trade. So when did I send out the tweet? Discount to duration, 2:06 p.m. 2:06 p.m. guys. When was the bottom edge? 2:26, 2:13, 2:14, 2:15, and 2:16. So you had 10 minutes to get your buy trade on the books and make yourself ultimately $1,000. Another live tweet, another $1,000 profit if you pay attention to the tweets, if you pay attention to the signals. You would have been able to make a very, very simple decision about buying that duration, but you would always be reminded of what? To try and get the sell back on. There is a 50 basis point hike that is not fully priced in, but still has to be priced in by the market. We still have 13% of that 50 basis point to price in. So a lot of it has been priced in, but some of it's still to be priced in. In addition to which, we have a tightening to price into the markets as well. Tightening to price into the market as well, guys. Crazy? It's not crazy at all. It's easy. And why else was it easy? Well, I told you this earlier this morning. I told you earlier this morning why this also was easy. There was the low of the bracket, there was the high of the bracket, and this was the measured move price right there. There it was. That was the measured move. Was that difficult to spot in terms of market structures, or easy to spot in terms of market structures? I'm assuming everybody got that market structure right. I'm assuming everybody saw it. Congratulations if you did. What the hell is wrong with you if you didn't? Simple as that, guys. You've got to try and step up into these trades because they are fantastic opportunities to make easy money.